Disclaimer: this video is only for educational purposes and not an investment or trading advice by any means. Any stock discussed is purely an academic exercise without any recommendation or commercial interest. Scientific investing as well as presenters may or may not have any investing or trading positions in the stocks discussed. During this video, we don't hold any responsibility for anyone's investing or trading losses. Please do your own due diligence or consult your financial advisor.
For a commodity trader. So he is trading in crude palm oil derivatives and nickel derivatives. And also my my wife is posted in Embassy of India here in Jakarta. So that is why we both are here, working here. So that's brief about me.
Sure, thanks, Himanshu. So Himanshu, one thing, because many of the folks who are posting their questions, many belong to fundamental, and they want to learn about technical. And as you said, when you started, you didn't know how to exit. So those kind of questions are there in everybody's mind. So if somebody he wants to start his journey, how do you suggest him to start in terms of resources, whether it's books or some channel or some videos, or or even some people are asking about CMT, what are the materials one should go for, if somebody wants to go for CMT, CMT charter.
So I'll tell you about my journey. If you want to start as a beginner, Zerodha has their own website with the name Varsity. So they have somewhere around 16 to 18 modules, but you don't have to go through each and every module. I think module number 2 is on technical analysis. So that's a brief summary of the TA written in a very crisp format, around 170 pages. So you can start with that. And it starts from basics of TA like support, resistance, trend lines, and then Fibonacci ratios, and then chart patterns and candlesticks. I don't think they cover chart patterns, but candlesticks still obviously it's there, and few basic indicators. So I will suggest go through the module on technical analysis first, and thereafter you will realize that this is the particular area where I'll want to focus more deeply into. For instance, I realized that I should study more about candlesticks, so I went with the books written by Steve Nyson. And thereafter, for chart patterns, you have so many books. Like in my pinned tweet, I have listed the resources, but I will say you either you go for a mentor or you spend 1 year, 8 months to 1 year reading about from the basic books. So these are the two sources. So I'll recommend initially go through the basics through the Varsity module and then go deeper into the books. So that would I will advise as a strategy for any beginner. And as far as CMT is concerned, basically CMT is for if you want to make a career in the market, in the financial world. So CMTs are also employed as portfolio managers, hedge fund managers, or maybe arbitragers. So CMT is a 3-stage process. हम लोगों में I think Ville curriculum has $250 or $300 per level book. But so I'll start books, and for CMT only needed if you want to make a career in the market.
Sure, thanks, Himanshu. And one interesting, thing which I got reminded because you spoke about Steve Nyson book. So when Himanshu and I we started interacting on Twitter, it was the usual exchange of Twitter messages, and then we exchanged our phone numbers, and I saved his number, and or I didn't even know his name, so the way I saved his name was Steve Nyson. And then one day I saw Steve Nyson calling or something, so then we spoke, and then we got to know our names. So then he said that I didn't know what to keep, so I just left like Steve Dyson. So got reminded. Okay. So Himanshu, one more question. So many people think, if you are trading, that means you have to sit on the system for 10 to 3, which means you cannot do any other job. So what is your view? Is trading like a full-time job, or somebody who is in a, different job can do trading as a part-time activity? What is your point of view?
Sir, actually trading में it starts from the shortest form of trading is scalping, where you are buying huge quantities for merely few minutes, and then it goes to intraday trading, buying and selling in a single day. Then there is a swing trading, like a stock moves in an uptrend, forming higher high and higher low formation. So you are capturing only one swing of that journey. Then you come to positional trading, which is generally a little long term till the trend is intact. For instance, अगर आप लॉरेस लैब्स का चार्ट देखें तो 80 or 90 levels पर first breakout आया, then it went till 600 700 levels. So that's positional trading. जब तक trend reversal नहीं आता है, till then you are sitting in a stock. And similarly, Balaji Amin started from I think around 800 850 levels, went till 5,000 rupees. So if someone is a working professional, so scalping is obviously a big no, intraday a big no, swing trading still can manage, but I think he or she will be more comfortable in positional trading, जहाँ पर weekends पर आप weekly basis पर closing में charts देखेंगे on your weekends, and then you just have to execute your orders in the market, and then you do not have to do nothing. I mean, you don't have to do anything based on daily time frame, because the moment you go on daily time frame, the noise will increase. Monday to Friday you will be working, so you will be squaring off your trades considering that noise level. So वीकली चार्ट्स आप देखेंगे, वीकली चार्ट्स के बेसिस पे आप उस पोजीशन को होल्ड करके रखेंगे जब तक वो आपको एग्जिट सिग्नल ना दे. और इस तरह से वर्किंग प्रोफेशनल कैन ऑल्सो start their trading journey in the market. Basically, you have to get out at some point of time. And for positional trading, it is more advantageous, because the lower time frame you go, the more is the noise. आप unnecessary trading करते हैं, over churning होता है, जिस वजह से you are not able to beat the Nifty. Whereas positional traders are at least able to beat the Nifty index if they are selecting the right stocks and holding on to them for at least 3 to 6 months. Yeah.
Okay. So let us say, I mean, are you suggesting that, let's say, even if somebody has full time, like he wants to be a full time trader, but if he's new to trading and he has finished his basics, still you are suggesting he should not start with, intraday because of the noise and the risks involved?
Risk involved, and intraday also needs your faster execution. So if someone is a beginner, he should start with either swing trading or positional trading with proper risk management. Do not start with intraday trading, because intraday is like you are flying an airplane without even know how to control it while it is in the air, mid-air. So that's what I'm saying. Intraday is highly risky for a beginner because it demands faster execution. The brokerage cost will kill you, the STT will kill you. So these are the things involved. First, you cover your foundations with the much lesser noise version, that is your swing trading or positional trading with proper risk management.
Got it, got it, got it. So, listeners, as we are progressing, what we will do is I have certain questions. I will finish the question. Then we have gone through all the questions which you have posted on Twitter, and we have tried to categorize all the questions, put it in an organized manner, and we'll go through all the questions, and then we will open the floor for more questions, so that if any of you have more questions, we will ask.
Sure.
So, next question, Himanshu, in terms of your learning, what has been like, if you want, you can say, what are your top three learnings in your, last many years of your stock, trading journey? What are the top three learnings?
The main learning is the proper position sizing, because if you are holding a stock in a portfolio, let's say your portfolio is 10 lakh, if you are holding a stock for 10,000 rupees, I mean, it becomes a 10 bagger. I mean, आप खुश हो गए या will you feel sad about it, because it became 10 times your 1% position. If it becomes 10 times, then you generate only 9% return on your total portfolio. So if that position would have been 10% of your total portfolio, it moved up 10x. You got a right stock and your portfolio moved up by many x. So 10% position moved up 10x, you generate 9 portfolio. So your position sizing is really very important. And second thing is the risk management. Most of the people earlier also, I also used to do the same thing. I was looking for stocks near 52-week low. What is the problem there? They are sitting near the lows for a reason. I am not denying that some people also go there to look for the bargain hunting or maybe bottom fishing. I'm not denying that. But the probability of success is very low. You need to have much higher command on fundamentals to understand the business is there for a reason. So look for the stocks near to their highs, and preferably those stocks which are on to their all-time highs. And I mean, their 52-week high is also their all-time high. And the third biggest learning was the risk management. Earlier, I was very hesitant to cut my losses, but now the moment I see a loss going up 0.5 to 0.6% of total portfolio, I cut that loss immediately. I sit on cash, maybe I look for another opportunity, but I will not let that loss run deeper. So position sizing, risk management, and looking for the proper stock selection, these are the three key learnings which are needed to generate stupendous return in your portfolio.
Thanks,
Yeah.
Himanshu. And I think this is important because many of us we think always about the accuracy, but accuracy is just one part, in the overall trading system. And as you said, the risk reward and the position sizing, these two are important. So what makes ultimately you make it's a combination of your accuracy, position sizing, and risk management.
करेक्ट बिकॉज आपका अगर मतलब पोर्टफोलियो में लेट से आप बहुत प्रैक्टिस आपको हो गई है चार्ट पर, यू कैन कैच अ 10% स्विंग. सो 10% स्विंग अगर आपका 10 to 15% का पोजीशन है, वो अगर अगर वो 10% ऊपर चलता है तो आपका पूरा पोर्टफोलियो 1.5% ऊपर जाता है. सो 2% पोर्टफोलियो अगर आप 12 टाइम्स ऊपर लेके जाते हैं, दैट इज 26.8% रिटर्न. मोस्ट पीपल थिंक इट इज 24%. So 2% generated every month is 26.8%. So ये small compounding आपको एक long route पर बहुत impact करेगी. So that is why I'm saying proper position sizing is very important in trading or even in your investment journey.
So given now we are getting a flavor of what kind of trader you are, and my interpretation is you are more on the swing side who holds his position. So like when you look for the kind of system you build or process you follow, what is the kind of accuracy you look for? What is the kind of risk reward you look for making a decent return?
Basically, I have a stock selection criteria. If stock is matching my criteria, I get into it, but the stop loss is never 7 to 10% more than my buy price. So, like I bought a share at 100, so my stop loss won't be less than 93 or 92. That doesn't mean that I am buying at a random level. So I have a proper fixed criteria. The stock should fulfill that criteria. The price should squeeze. The volume should squeeze. The stock should be in an uptrend above all key moving averages. That's what I'm looking, proper base formation. And market is also in a healthy state. So when these conditions are fulfilled, then I take my entry with at least 10 to 12% position. Initially, I never go in, below 5%. I generally start from 6 to 7% position. Sometimes because I'm focusing full time on the screen, I can go up to 15 to 20% also. And if that stock makes a move of 10%, I generate 2% of my portfolio. But risk is always defined in terms of, half 0.5 to 1% of my total portfolio, but sometimes the risk may become bigger because the position sizing is huge.
Okay, okay, okay. And what has been your three big mistakes in the market, like which were you're learning, like, okay, this you will remember for your whole life?
Correct. Like I focused on stories, like most of the fundamental analysts also, like I was also a FA. So I was also believing on what promoter was saying. I invested in a micro cap company. In fact, the promoter was awarded by the Gujarat government for being the best entrepreneur. Still, he was caught afterwards with a big GST fraud. Even though the numbers were changing, I was not paying heed to that. So behavioral finance में एक बायस है, जैसे दैट इज कॉल्ड एंडाउमेंट इफेक्ट. जो चीज आपके पास है आप उसकी वैल्यू ज्यादा करते हैं, या आप कोई भी कॉन्ट्रेरी ओपिनियन सुनना नहीं चाहते हैं व्हेन यू आर होल्डिंग ऑन टू अ स्टॉक. सो उसके अगेंस्ट कोई कुछ बोलेगा तो आप रिसेप्टेबल नहीं होते हैं. तो वो बड़ी, सो इट वाज आई वाज सफरिंग फ्रॉम दिस एंडाउमेंट इफेक्ट बायस इन द मार्केट. So in that micro cap story, even one promoter took an exit. So I was not actually believing what my charts were showing, or you can say I was not even having complete knowledge of technical analysis. So then I realized now, no matter how strong the fundamentals are, if big hands are exiting from the stock, I have to get out with them. And if they are entering the stock, I have to stay with them, because I cannot fight against the big institutions. They have much more advanced knowledge than me. They have a proper team. So they are working together. That's what Richard Demel Wyckoff wrote in his book, Tape Reading, I think in 1932. And so I am a big follower of him, of this strategy. So my biggest mistake was that I was suffering from this bias. And my second mistake was that I was not cutting my losses, as I said, and the third was the position sizing. So the three big learnings were also my three big mistakes. Apart from this worst mistake of endowment bias, so I'm not suffering from any bias right now because I know what these biases are. So they can decouple me from my investment thesis. So always will be this, like I was holding on to losses, sometimes I was averaging. So I will always recommend everyone, कभी भी अपनी पोजीशन को एवरेज मत करिए इफ इट इज गोइंग इनटू अ लॉस, बिकॉज आपका वो जो पैसे पहले से आपके पास अलग से कैश रखा है उसको भी आप लॉस में और डाल रहे हैं. सो दैट इज द प्रॉब्लम है.
Okay, thanks, Himanshu. And I think you are a very good reader. You read a lot of books, a lot of papers of some of the mathematicians or chartists, because whether it's Wyckoff or Steve Nyson or Wilder. So who has impressed you most, in terms of all the famous traders, and why?
Like it's very difficult to rank them, but the most impressive was Sir Larry Hite. He has written a book, The Rule, Beating the Odds in the Market. So why he impressed me a lot? Because he was born half blind, and from the other eye he could only see half. So he was suffering from dyslexia. He was not knowing the terminology for the disease. So when he turned, I think 12 or 18, he read in a book, this is the condition. He cried a lot. He's the mentor of Sir Mark Minervini. And if you read the book, he wrote in his book that I had something despite not having proper vision. I had imagination with me. So with his imagination, his hedge fund turned $1 billion, the first hedge fund in the market which I think around touched in 1980s $1 billion assets under management. He was awarded Lifetime Achievement Award in 2013. Then obviously some great legendary traders like Sir Stan Weinstein. He wrote his book Secrets of Profiting in Bull and Bear Market Strategies. Then obviously Robert Levy, his article on relative strength, which Mark Minervini sir has also mentioned in his book. And Richard loves super performance stocks. And then there are basically many traders. Thomas Bulkowski, he used to see 12,000 charts for a decade. So Dan Zanger, he wrote in his interview Momentum Masters book, the question was how many stocks do you screen every day? So Dan Zanger's reply was, I check 1480 charts every day, 1480. So that's a massive task. So there are many legendary traders who have given then Sir Jesse Livermore, his book How to Trade in Stocks. Then William O'Neill, that's a complete Bible for traders, how to make money in stocks. So these all legendary traders have a role to play, but one thing they have in common was the risk management. So Ned Davis, also one of the legendary trader, he has still his website, Ned Davis Research. You can check in America, NDR. Much of like you, sir, data driven. So he actually interviewed a lot of people. So he found one thing common in all of them: risk management, proper position sizing. So these are all the legendary traders who have had a great impact on me.
Sure, this is very interesting, and thanks for enriching with all the details. I think many of us, we may not have gone through all these books or their work, so it would be interesting to go through. What I will do next is I have picked some questions from Twitter, and we'll go in the sequence of how you prepare about buying, and once we cover buying, then slowly we'll get into the stop losses and exits, and we'll go through some general questions. So the first question, and again, every trader may have his system, and it might be his IP. So feel free to draw the line where you want, how much you want to reveal and how much you want to hide. I'll leave it up to you. But the question was, every trader they have their system. So what is your system and what is your screening criteria? And I have an added question to that, because I believe anybody's system, that's a dynamic thing. We keep working and we keep improvising, because mostly we will not be happy. So what is your methodology and framework for improvising your system?
So my system revolves around those stocks which are near to their highs. So I prefer those stocks which are, let's say the 52-week high is 100. So I will only look for those stocks which are trading over 80, off, you can say off 20% from their highs, and or above from 52-week highs. Then I will look for those stocks which are considerably above 52-week lows. The most important cornerstone of my system is relative strength. I compare relative strength of a stock. Relative strength is nothing but how much is the outperformance of my stock compared to the Nifty for the past 3 month period. So I will, I mean, fetch out all the stocks that are performing stronger as compared to Nifty for the past 3 months, and then in that scan, I will look for stocks that are in solid uptrend. I mean, they are above 50 days moving average. They are also above 200 days moving average, and 50 is itself above 200 days moving average. And I do not trade for stocks that are less than 100 rupees. I do not trade in them because I have burnt my hands a lot. There were manipulation in small price scripts. Just keep this like more than 100 rupee stock, and volume is also more than 50,000 or maybe 1 lakh. And then every day I run this scan, so I get around 150 to 160 names doing great. And if the market is in a very precarious condition, then I get around 90 to 100 names. I remember, I think on one fine day I got even 80 names also. So that also is a market indication for me. It tells me a lot about the state of the market. And out of 140 names, then I eliminate the stocks that are circuit to circuit, like BCG, Leica Lab, TTML. These are all every day coming up through my screen. One fine stock, Xpro India, was also coming through my scan a lot of time before, but it is a circuit stock, so I eliminate them. So I am left with almost around 80 to 90 names. And thereafter, I will look for the proper setups, proper base formation. And as I have posted so many charts on Twitter also, that I'll look for the proper base formation breakouts in those cases. Sometimes I have to wait for the breakout also. So I'll keep them on my focus list. I will look at the sectors. So out of those 80 and 90, it is not like that I will track each and every stock. Some stocks will be flying. Like today, yesterday Sharda Cropchem passed through my scan, but it's a vertical rise, vertical lift. So I cannot trade in that because risk reward is not favorable for me. So then I will look for the leading sectors, the strongest sectors, and stocks in those categories. And if the number comes down to 25 to 30 basically, and out of those, the risk reward is favorable only in the best 12 to 15 names. Now, this is my focus list. I focus intensively on them during the week, and I start to build my positions as the market reacts in my favor. And as I said, that I can go up to 10 to 15 or 20% even in some names, because I have done enough research on the weekend. So that's how my system works.
Sure, sure. So I believe every week you go through some 80-90 charts, and then out of those 80-90 you make your own preferable 15-20, and that is how you track. So weekly, what is the churn rate like in a month? How many stocks get churned? Like, because new stocks will make 52-week high, some stocks will, start correcting. So what is the level of churn you see following this kind of strategy?
It depends on the market condition. Like in March 2020 or April 2020, market was coming from a very deep correction. Market was coming from 7511 on 23rd March. So market was coming from there. So I knew that if I sit patiently for stock with the stocks for 9 to 12 months, many stocks will go up 4 to 5x because market is in a deep dire state. So I bought Laurus Labs, Deepak Nitrite, Balaji Amines. I am holding to some of them. Some of them I have sold for 5x, 6x already. But now, this time, I don't believe the market is in the same condition, and any stock can go up 6x, 7x in the same. But I mean, the probability of that is very less. Earlier, the probability was very high. You pick 100 stocks, 50 may go up 3x, 4x, 5x. But now, that's not the case. So now, I am trading based on my trading is merely around 14 to 20 days, a swing trading kind of trades. But since market is not in my favor again, so I am sitting on 80% cash as of now. Rest I am holding Nifty Bs and only 2 to 3 names, which I posted on Twitter. So basically, the churn rate depends on the market condition. If market is coming from a deep correction, deep crash, or a bear crash, I will hold on for maybe around 9 to 12 months. The churn will be very low. But if the market is not in my favor, or I think the probability of that 5x, 6x is very low, then I will trade for a very short period of time. So the churn rate will be, every stock will sit here for 15 to 20% move, and then I will switch over to the other stock. Now that may come in 8 days, or that may come up in 15 to.
Hello.
Yes.
Yeah, go ahead. Keep going ahead.
Yeah. So my churn rate comes around, I think around 10 to 15 days or 20 days if I get a 10 to 15% more, but all that depends on the precise entry, because I cannot sit in a stock for 1 month, the stock is not moving because I'm trading for a short term sometimes. So I want that I enter the stock and within 2 to 3 days it should move. So that is why I am practicing a lot on charts to time my entry precisely. Now precision is the key here. You have to enter at the right spot when the price has squeezed for the final leg. For instance, I can share one chart, Reliance Infra. I don't know what the company is doing. Maybe fundamentally it is a junk stock, but the chart is developing very nicely. I don't know what's coming up, but if I'm still waiting, I have not taken entry in that. I mean, that's not a buy or sell recommendation. Maybe I will get some other chart also with the same structure. Like Borosil Renewables, I shared on my timeline once when it was squeezing tightly around 260 to 270 zone. So that's where I took my entry. So sometimes the churn is for around 14-20 days, depending on the condition of the market.
Mm-hmm. And as you said you have a time-based, exit also. So, like, is it like you keep a simple 5 day or 2 3 day time window? As you said, if it doesn't move in 2 days, you will exit, or is there a different way you handle? How are you
I
going to manage?
generally, I generally keep my stop loss for my short-term trades. And for my positional trading, I'm waiting still for, but generally, see, Indian market has 7,500 stocks approximately. If you come to Indonesia, it is 800. If you go to Uganda, only 10 companies are listed. So India में opportunity हमेशा बैठी हुई है. आपके पास एक स्टॉक आपका नहीं चल रहा है तो सामने में 20 लाइन में है जो ब्रेकआउट दे करके भाग रहे हैं वहां पर. सो प्रॉब्लम ये है कि आई कैन नॉट सिट फॉर मोर देन 2 to 3 weeks बिकॉज आई एम ऑल्सो साइमल्टेनियसली वॉचिंग की वॉच लिस्ट में सम अदर स्टॉक बिकॉज आई हैव 12 to 15 फोकस्ड नेम्स. सो कोई और उसकी जगह चलेगा. सो अल्टीमेटली माई end goal is to multiply my money faster by compressing my time. So I will not hesitate to switch. I usually switch for maximum 2 weeks maximum I will tolerate. Otherwise, I will switch to some other position in my focused watch list. Because Indian market is very, very broad. If you come to Indonesia, very difficult to trade here. So many stocks are not having enough trading volumes. If you apply RS, only 10 or 12 remains, and that too highly volatile. So India is blessed country with lot of growth opportunities there.
सो ऐसा कभी हुआ है कि जैसे एक स्टॉक में 2 वीक वेट किया और निकल गया और निकलने के बाद वो मूव कर गया? सो इमोशनली, दैट ब्रिंग्स द इमोशनल एस्पेक्ट. हाउ डू यू कंट्रोल योर इमोशंस एंड दीज काइंड ऑफ सिचुएशंस वेयर यू फेल्ट बैड बिकॉज यू एग्जिटेड जस्ट एट द रॉन्ग टाइम?
ऐसा मैस्टेक में अगर आप देखें, अभी रिसेंटली उसने इन्वर्टेड हेड एंड शोल्डर ब्रेकआउट दिया था, तो वो 10th जनवरी को मैंने एग्जिट किया मैस्टेक में से. और मुझे जहां तक याद है, इफ आई एम नॉट रॉन्ग, 11th जनवरी को ही उसमें एक बड़ा स्ट्रॉन्ग मूव आया, अप मूव आया. सो मैं बहुत टाइम तक IHNS ब्रेकआउट के बाद उसमें बैठा रहा मैस्टेक में ऑलमोस्ट अराउंड 15-20 डेज. अगर आप उसका चार्ट खोल के देखें तो 10th जनवरी को आई एग्जिटेड और 11 जैन को उसमें बड़ा स्ट्रॉन्ग अप हुआ है. तो ऐसा होता रहता है ट्रेडर्स के. देखिए, एक शेयर हीकल था जिसमें मैं 212 पे मैंने एंट्री ली, वो ब्रेकआउट था, मैं 512 पे उस पर निकल गया. सो ट्रेडर की लाइफ में हमेशा ये रहेगा, 512 पे आप बेचेंगे, वो नीचे आ गया तो आप खुश होंगे मैंने बेच दिया, वो ऊपर चला गया तो आप कहेंगे मैंने जल्दी बेच दिया. सो दीज हैप्पीनेस एंड सैडनेस आर पार्ट ऑफ योर स्टाइल. दिस ट्रेडिंग में ये पूरे लाइफ टाइम लगा रहेगा. यू लुक फॉर अदर अपॉर्चुनिटी. सो ऐसा भी होता है, काफी बार होता है ऐसा.
So the next question is, suppose there are four stocks and they are showing similar kind of patterns, and given you take concentrated positions like 10%. So how do you figure out? I think can you go a little deeper? Like out of 80, you might find 30-40 stocks. Is it like you follow a ranking methodology based on RS, or how do you figure out like this is the 15, or is it totally discretionary?
So one is 80 names have come up, then I will look for the sectors. For instance, I remember Carborundum Universal gave a breakout around 450 or 470 level. I declined that stock because it is from an industry. वो मुझे ऐसा लगा कि it cannot go up 4 or 5x, या जिस तरह का मूव आई एम एक्सपेक्टिंग बहुत जल्दी हो जाएगा, वो मूव उसमें नहीं होगा. So I will give you one another example in September, like I told you about Hekel's breakout. I think Hekel gave a breakout with Cadila. So Cadila was also in the list. Hekel was also in the list. I will prefer then market capitalization to be lower. That is why I went with Laurus Lab, Balaji Amines or Deepak Nitrite or Tata Elxsi, because that time market they were in from the small and medium cap space. So अगर list में large cap name है तो I will give less preference, then small cap mid cap में ज़्यादा preference, and also it depends on the industry sector. Then I'll read latest annual report, visit the website, I will understand what are they actually doing, and कुछ एक trigger उसमें होगा, as William O'Neill says, that can slim approach. So I look forward for any new product or new services or new management structure change. So उस case में I go on through basically qualitative checks. That is all human interference in that there, because ultimately a computer cannot take out stocks for you. So human intervention आएगा. So like Hekel was preferred as compared to Cadila. Hekel's management was like talking big on these API products and all. So 212 was the breakout level. So I entered Hekel as compared to Cadila. So if you have 80 names, then I will select the sector. I will definitely will not go with the PSU companies, or I will not go with infra names. I will not go with real estate, but I will go with the names which are like the sectors that are strongest, and preferably from the small cap space or from the mid cap space or even from the micro cap space, because I have made more money in micro and small cap rather than large caps.
Okay, okay. And do you believe in pyramiding or averaging up? And if so, then like how do you do it? How do you identify the levels where you are going to do averaging up?
So pyramiding is very, very important for any investor. There are two terminologies, like I said before. Pyramiding down, that is your averaging, आपका stock नीचे गिर गया, आप उसको और खरीदने हैं, that should completely be avoided. That's the most rubbish thing you can do. उसमें ये रहता है कि आपको या तो फंडा का बहुत ज़्यादा knowledge है, and it's a pyramiding is definitely recommended, because आपको पता है कि आपका एक stock winner है already, तो उसमें आपको you should add more, because उस जैसे टाटा एलेक्सी के केस में है, it started its journey from around 850 levels. Now it is standing at 7200. So every level per you have to add more. Now what do I mean by every level? It is the base formation, the right setup which you will get along the journey, because think it is like a running express train. वो ट्रेन चल रही है तो चलती ट्रेन में तो आप चढ़ेंगे नहीं, you have to wait for the next platform. So that platform is your next base breakout, जहाँ पर stock consolidate करेगा या थोड़ा सा time बिताएगा, and when it breaks out for the next time, then you have to add more positions, and simultaneously you have to keep focus on your stocks, which जो भी आपके losers हैं उसमें आपको पैसा कट करना है, वो पैसे को विनर में शिफ्ट करना है, या पिरामिडिंग कीजिए या नया विनर ढूंढिए. In that way आप ये करके देखेंगे तो portfolio return will improve considerably. So averaging down is not recommended, but pyramiding up is highly recommended. Averaging down may, now some like Kathy Wood of ARK Investment is doing averaging in some stocks. Now maybe she has a right point, maybe she has a thesis on based on fundamental analysis, I don't know, so I cannot comment on those fundamental parts. But for me personally, averaging down is not recommended. Pyramiding definitely.
And when you say that you wait for the base formation, and I know I've seen a lot of charts and I understand, you understand the whole closing price and all, but is it purely based on the price volume study, or you look for some of the other indicators also, like some kind of moving average indicator, or, Bollinger Bands for understanding of base pattern, or, the low formation?
No, only only price and volume and moving averages. So these three only, and relative strength should still be above zero. At least it is telling me that the stock is still an outperformer. So I'll be looking for relative strength outperformance, continued outperformance, and the stock should be bought with, I mean, whenever the stock is being bought, volume should be higher. So I am at least knowing that a big buyer is interested here, and when it gives a breakout, I add more.
And the
So
relative
it's based on price volume and moving averages.
And the relative strength point remains in the beginning. I think somewhere you said that you look for the relative strength with respect to Nifty. So why Nifty? Let's say if you are playing with a small cap stock, so why Nifty? Why not with a small cap index? And there are times when Nifty and small cap index may be moving in reverse direction. So still, relative strength with respect to Nifty works, or is it like you can change it?
Yeah, I can change, but I haven't done that because fairly what I believe is that Nifty ETF is available in the Indian market, so you can anytime buy Nifty ETF. So I'm actually interested in knowing whether whatever stock I am owning, is it giving me more return than these Nifty ETFs or not? If it is not performing better than Nifty ETF, then I am not interested in trading or investing at all, because then simply I can buy Nifty ETF and sit patiently. So Nifty small cap most of the time has an outperformance as compared to Nifty. So if sometimes Nifty has moved up by 15%, I think the small cap index would have gone up by 25%. So in that cases, the number of stocks in my universe will come down. That I do not want to miss out. So that is why I compared with Nifty 50 stocks, and also because ETF is readily available, and also because I want to outperform the benchmark. That is why, I mean, in my personal portfolio, so that is why I focus on Nifty 50 only.
Okay, okay. And I see you posting a lot of charts, the typical chart pattern, let's say like a head and shoulder and all. And in that, how much the stock will move, there is a literature available based on, the height of, the top and the, bottom. So when you enter into a stock, do you initially itself define your exit price based on those rules, or you follow more like a trend following system where you let your stock run till whichever point it is running? So how do you decide the exit, and do you decide the exit price in the beginning itself, if you can throw some light?
Like I decide the target price basically to obviously know the risk reward in this stock, because if I'm taking a risk of 10 rupees, I at least want a reward of 20 or 25 minimum. So that is my first criteria. Secondly, I'm like as I said before, if I'm doing only swing trading, then I will be trading the breakouts. Like I will be taking 10 to 15% from this breakout, then move to another, then move to another. But if I am in only in certain cases when I am much aware of the stock is coming from a long consolidation period on a longer time frame, and the breakout is occurring about 200 days moving average, then in that case I am a trend follower. For instance, I can give one example of PSP projects. Now I don't know how the stock will perform, but if you look at the chart, it has given a breakout since 2017 or I think 16. One big institution has entered right before the breakout. Now the stock has broken out after so many years. So I do not want to trade merely for 10 to 15%. In this case, I mean, ride the trend as long as it goes. So I will not exit. So that's my strategy is basically.
Okay, and what are your exit criterias? Like, how do you decide this is the time to exit a stock?
So if I am riding the trend, so I follow the weekly charts. In weekly charts, I will obviously go with the every higher low the stock makes. If a stock breaches my previous higher low, I exit. Or if a stock breaches my 200 days moving average, I exit. But usually it never happens that the stock breaches my 200 days moving average without breaching the previous swing low. So also if these, I mean, first case previous swing low, second case 200 days moving average, and the third case is if there is a bearish pattern on the chart and the target of that bearish pattern comes below my 200 days moving average, I exit. For instance, I exited Loris Labs around 545 because there was a big bearish head and shoulder pattern for which the target opened up was 450, which was well below my 200 days moving average. So I love to book my profits. Secondly, apart from these three strategies, the second strategy is very simple. I sell into strength. If a stock has shown me 20%, 20% 2 days move, and it is too far from even the basic 8 days or 20 days moving average, I nail down my profit. I book my profit. It happened in so many stocks like IRCTC, GMM Fodler. GMM Fodler I was not owning. I was owning IRCTC. I nailed my profit. In Hikal, I nailed my profit. And similarly in Greaves Cotton, I booked my profit because The stock moved up quite violently, so I got out around 246, and now still the stock is at 210. So when a stock moves madly for 20%, 10%, I bring my stop losses closer. I start selling my positions. So two criteria for selling. One is your previous swing low if I am following a trend, or a 200 days moving average, or a bearish pattern whose target comes below my 200 days moving average. And the second criteria is selling into strength.
This is very interesting, Himanshu, because usually, normally what we hear is, whenever there's a weakness or it gets broken, you sell it. But if there is too much of strength and too much of run up, and the gap, as you said, the gap between your moving average line and the closing price has increased a lot, then it makes sense to book profit. Very interesting.
Yeah, you have to book profit because that is the concept of mean reversion in technical
Yeah.
analysis. Anything cannot stay away above from the too far from the mean for a prolonged period of time. Either the stock will consolidate so that the moving average comes up, or the stock will correct and come to test the moving average. So one thing is a sure possibility.
So last time when I needed insights on whether some of these technical patterns have been back tested and you gave me a name that was very helpful. Has there been any study been done like of on the distribution analysis of the gap between the closing price and the moving average? Like just to understand the probability of success, like if it is below more than 60% than closing price than your moving average, the chances to go further up is very low. Any study you have seen, any quantitative study of these kind of distribution?
I haven't seen any study, but I have generally, obviously, I have seen the teachings by legends like Stan Weinstein in his book has mentioned about when a stock, now not in his book, now he has said in an interview with one American trader, Richard Moglen, that now in Stan Weinstein says, I'm quoting him, he says that in 1980s markets were very easy to trade. So, but now even if I go to bathroom and I come back after 5 minutes, I think the stock would have broken 50 MA. So such is the condition of the market right now. Markets are highly volatile. So Stan Weinstein is now saying in his interview that when a stock moves too far from 200 days moving average, 60-70%, you trim some positions. But I generally don't do that because in 200 days moving average, how far is far, you never know. So I haven't gone through any study. So if I come across, I will definitely share on my profile. But so far I haven't seen any study on that.
Sure, sure. In fact, I also agree because this is something which I also observed, and nowadays I try to ensure that at least I am booking partial profits when I see, this kind of, too much run up in too quick time with very high volume, that kind of thing. So interesting. The next question is, apart from the indicators which you mentioned, like the price volume action and the relative strength and moving average, anything else do you use as technical indicator?
There are, see, like I am CMT level 2, so I know so many indicators, but every indicator has a purpose. Not that, I mean, there are around thousands of indicators, but you cannot use every indicator. It's like a toolbox for a car mechanic. He may not use every tool for every car repair. So there are some indicators which helps you in certain conditions. For example, there is one indicator by Norman Fosbach. It's a high-low logic index indicator. It tells you about how many stocks are making their highs as compared to the lows. So that indicator is helpful during particular conditions of the market. For example, if you go through the times of this October, the last week of October and the November, the number of highs were coming down, the number of lows were obviously stable, but it gave you a sense that something is not right with the market because market is still near the highs, but the number of stocks are going down and the market has started filling the gaps, which obviously made the exhaustion gap on Nifty around 18,300 level. So there are many indicators. So there is one McLennan oscillator which also tells about the state, like the 19 days and 30 days moving average of the advancing and the declining stocks. And there are, I mean, so many indicators, but I use some of them on some of the market conditions, not every time. Like I'm using RSI, not at all. I'm sorry, I'm using RS. I'm not at all using RSI, not at all using MACD. So for accumulation and distribution, you have some other indicator, arms index, the trend index. So there are a lot of indicators, but that doesn't make any sense to put every indicator on your chart and you cannot see the God, which is the price. So every indicator has been designed in such a manner to be applicable in a certain condition.
Sure, sure. And one last question, and then we will open the floor for questions from audience. And one more message. So we got a lot of questions, which I felt, and in fact we felt that was too technical, and a verbal reply may not do justice. So I have shared those questions with Himanshu, and maybe in some of his tweets he will try to provide answers through more visual charts, because we felt that will do a better justice to the questions. So one last question: if we see some of these metric like RS, it is based on 55 days, or if we look at RSI, it is based on 14, and not only days, I mean whichever periodicity. So are there specific reasons why these specific numbers have been taken for calculation? Why it is so?
Basically, when RSI was designed, it was considered to be the one half of the natural cycle. They considered it to be a 1 month cycle, so that is why they took the number 14. So RSI has a formula, like a big formula, 100 minus 100 upon 1 plus RS. RS is your number of up days, number of down days. To keep it very simple, in past 14 days, you see when the stock is moving up and the number of days when the stock has gone down. So you calculate the I mean, if the stock in 14 days, out of 14 days, have moved up only 5 days by 100 points. So 100 is the up percentage. The down days, similarly, you will calculate for the rest 9 days. You will calculate RS through this. So 14 comes from the natural half cycle. But why did I explain this formula is that you can extend the number of days. So instead of taking these 14 days, what you do is that you club 2 days into a single day. So what do I mean by that is, you take the data on Monday, then on Wednesday, then on Friday, then the next Monday. So similarly, you within the same formula, you can have now 28 data points, right? So this is one strategy in RSI. In RS, the number 55 days is chosen. Now that's a very interesting answer. I mean, I need time because it's very dear to my heart also. RS as a strategy. Relative strength, the first research paper on relative strength was written by H.M. Gartley in 1945. Then again Robert Levy wrote in 1967. Then Professor Narasimhan Jagdish wrote a research paper in 1993, and the latest one is the by Mebane T. Faber in April 2010. So if you read the research paper, which is freely available, I think 17 to 20 pages by Mebane T. Faber, April 2010, Relative Strength Strategies for Investing. So in that research paper, that's the commendable work done by Mebane T. Faber. There is one data library, Eugene Pharma Data Library, French Pharma Data Library, in which the data for all the stocks are there since December 1926. So Mebane did an exhaustive study, a complete study for all the stocks. He classified into 10 sectors, and then every month end he calculated the relative strength for each and every sector. The top 3 sectors he selected every month and put his money in those since December 1926 till 2009. Comprehensive study. So he has calculated the return and he has measured it that RS is performing beautifully on every time frame. If you calculate the performance for past 1 month compared to the benchmark, it is performing better. 3 months much better, but 6 months and 12 months not good as 3 months. Now the reason is the answered by Professor Narasimhan Jagdish. If I am telling you that look for every stock in the American markets or maybe Indonesia or India, compare the performance of 1 month as compared to the benchmark, there may be many false signals, because there may be some stocks that have moved up 20%, 30% because of maybe some news. So you will get a lot of false signals. Now, if you expand the time horizon, if you calculate the performance, compare it for 6 months or 12 months, now that's a very long period. After 6 months, it may be possible that you have missed a lot of move in your trusted stock. If you are interested in some stock ABC, you might have missed a lot of move in 6 months or 12 months period. So that is why what we usually do, we want a number that is not generating false signal, a number that is not missing out my initial 20, 30, 40% move in my desired stock. So that is why 3 months come out to be the appropriate level. So three months for RS roughly is about 66 days. It shouldn't be 55, but the 55 is taken because it's a Fibonacci number also and very near to the 3-month period. So that is the reason for taking 55 days.
Thanks for explaining in such a clear way, and using all the literature which has been written. And it's, I think it's very interesting for all of us, because we need to go back and read some of that. I have not read, so I will go and I will read more about it. So thanks. With that, I will open the floor for questions, and anyone who is interested to ask questions, please come forward and ask your questions, and I'll give approval one by one. So yeah, I'm just waiting. And Saurabh, I'm going to approve you. Saurabh, please ask your question.
Yeah, hello everybody. Thank you, Suresh sir, for hosting this space, and thanks for being very vocal and clear about this, Himanshu. And I must appreciate you for this fact that when I joined, I thought that I would not make sense of much of TA, like I had trouble with it, but you have made it very clear and easy to understand. So my question goes by, I am a fundamental guy like Suru sir was some days ago, and often what happens is I have conviction over a specific stock, but I only realize that it has went up by a certain number already because of the optimism, and then it starts correcting. So if I have to put my question in a simple way, fundamental guys do know that a business is very good and it has tailwinds and it will do very well in the long term, like 3 to 5 years. But in order to time the entry point and exit point and join again, how do we have to use technical analysis in this regard? Do we need a specific set of indicators, or should we have the basic idea like you mentioned a while ago? So my question is, how should fundamental guys approach it for investing purpose, if not for trading, the entries and exits?
For investing purpose, I will recommend to look for the chart on a monthly time frame and then come to the weekly, but don't go below weekly time frame. Look for the volume markers on the chart. So you look for the monthly time frame for chart first to understand about the primary trend of the stock or the security. If it is in sideways, then along with your fundamental analysis, you also need to understand the catalyst that will change the perception of the masses. Because you have done a fundamental research, you think the stock will fly in 5 or 10 years, but you need that trigger. What is that trigger in the company that will change the perception of the people, because the primary trend is still sideways? So focus on the monthly chart and the weekly chart, focus on the primary trend. Like Loris Labs was in, like Aarti Drudge was in a very long consolidation of many years, I think 5 to 6 years. The fundamentally company was doing something good.
Right, sure sir, that will help. Thank you.
Yeah, let me approve the next. Prachiti, please go ahead. Prachiti, please go ahead and ask your question.
Yeah, sorry, just Twitter Spaces just had a glitch. Sorry.
No worries.
Thank you for this wonderful session. Thank you, Himanshu. Very, very insightful. Great academic references. I had a question about moving averages. I know that there are a bunch of moving averages used. One is the simple moving average, one is weighted moving average, and one is exponential moving average. Can you throw some light on the relative merits or demerits of each of these, and which ones do you use in your system?
Sorry, my mic was off. So if you go with the basic simple moving average, now if let's say you are calculating 50 days simple moving average, then in that case you are taking the closing prices of past 55 days and taking the average. That is the simple moving average. But there is a fundamental flaw in this method. In simple moving average, you are giving equal weightage to all 50 days. Now that may be not a problem for 50 days, but when it comes to 200 days, I think the data for 200 days before data might be much different than the 2 days data. I think many of the things might have been changed in the company. I want a formula where my recent price, the latest price, is given more weightage as compared to the older data. So that is why we use exponential moving average in those situations. So if you switch from SMA to EMA, on higher time frames you will see much difference, but on lower time frames there won't be any stark difference in both of them. The other one you are talking about is the weighted moving average. In weighted moving average, we generally assign weights to the averages. For instance, from, let's say you have to calculate the first 10 days moving average, weighted one. So for the 10th day, you will assign a weight 10. For the 9th day, you assign a weight 9, then 8, 7, 6, so on. So what I personally use is the exponential moving average, because it takes into account what I explained to you, giving more weight to the recent data. But there are many in the market. You have pivot point weighting, you have linear weighted, you have triangular weighted. Now in triangular weighted moving average, what we do is, if you want to calculate the moving average for 20 days, first you calculate the moving average for the 10 days. Then again you take the moving average for the 10 days. So it's a doubly smoothed moving average. You are taking the moving average for the same data 2 times. So what I prefer is exponential moving average, simple one.
And Himanshu,
Thank you
if I,
so much.
yeah, Himanshu, if I remember, there was some study done where they tried to do a comparison between the incremental lift which they got by using exponential versus double exponential and all, and looks like there was not much of lift visible.
No, not much of lift visible. And in that study, they were also discussing about when should we enter, whether the price close above the trend line or the price close the trend line. So there were multiple criteria there.
Okay. Thanks, Prachiti, for your question. Manoj, you can unmute yourself and ask your question.
Yeah, good evening, sir. Sorry, I just missed this space, joined late. Just one query, Himanshu, can you just give me repeat the name of the last research that you given the name? I just could not note it.
So the name is by Neban T. Faber. He is also very active on Twitter. Neban T. Faber, April 2010 document, Relative Strength Strategies for Investing. You type on Google Neban T. Faber, April 2010 Relative Strength paper. You will get that paper, and it's from the Cambria Investment Fund, for which he was a portfolio manager.
Okay, sir. And one more thing, Kumar sir, this recording will be available so that can be gone through?
Yeah, Manoj. So we will be doing little bit of editing and we will put on our YouTube channel. So do keep a track on Scientific Investing YouTube channel. So just go to youtube.com and search for Scientific Investing. It's there in my profile.
Okay, that's great.
Yeah, thanks.
Yeah, that's great. Thank you.
Thank you. So accidental investor, you can unmute yourself and ask your question.
Thanks, Saurav. Thanks for the opportunity. Hi, Manshu. I have a simple question on accumulation. Like a person who is not well versed with the technical, how they should see the concept of accumulation and how that can help with the, say, business sometime.
I'm saying for accumulation, you must know about the charts, because sometimes accumulation may go on for a prolonged period, for 3 to 6 months period, or maybe it goes up to 1 month period. But without, checking the charts, you cannot say whether it is an accumulation or distribution. So first thing is that you must understand the chart. But to keep it very simple, the price will go in a narrow range. The volume will be very less during those accumulation and distribution zones. But during those narrow ranges, when price is in a very narrow range, if you look at the volume markers, on some days when the price moves up, closes in green, that time on those days volumes are really very high. So you get to know that someone is accumulating those shares here. Now, it can be distribution, but a lot of people say always wait for the price to decide. If it comes from the bottom hand side, from the bottom you have to exit from the stock. If it goes above, you have to enter the stock. But accumulation and distribution is also decided by the volume at the bottom. So that is an important piece of information. So I can share you multiple examples. Like one example was Nelco chart. It was consolidating for almost around 6 to 7 months before this digital news broke up. Then Gujarat Ambuja Exports, the recent chart, the accumulation was going on. Then there are many examples. So for that, basic understanding of the charts is must.
Thank you.
The next question is from Siddharth. Siddharth, please go ahead and ask your question.
So I think Kumar sir is mute.
Sorry, the next question is from Siddharth. Siddharth, please go ahead and ask your question.
Yeah, thanks, Kumar, and hi, Manju, for the very insightful session. I just have a question regarding basically there are a few TAs who, they are dependent on point and figure charts for deriving their assumptions about the analysis, whereas a lot of them also use candlesticks. So, could you shed some light as to what are the key differences between using the two kinds? Thanks.
The point and figure charting is based on box reversal size, and I mean point and figure charting in one simple statement, it's the noiseless charts. They are not taking time into consideration. I will mark a cross when the price moves up by 5 points. So if it moves by or let's say by 1%. So every time a stock moves up by 1%, I will mark a cross on my chart. Every time a stock moves by 3% opposite to my direction, I will shift the column and move to O. So candlestick chart, cost difference. In candlestick you get time. In point and figure, time is not considered. So point and figure, in my opinion, is much preferable for investing because it's a timeless chart. So it's very simple to understand and a timeless mechanism. In candlestick, obviously the noise will be more, but I believe the more lower time frame you go, candlestick is much more useful, because in point and figure, people will say that you can always reduce the box size, but that volatility will increase a lot in the point and figure chart. In fact, the first known charting was based on point and figure in late 19th century. So these are the basic differences. Like time is the main difference and the noise is the main difference in both the charting themes.
Thanks, Himanshu.
Right. So,
Thanks. Yes, Siddharth.
just a follow up on that. So, when we speak of averaging up, does it make more sense for us to follow a point and figure approach, or maybe a normal candlestick pattern would also suffice?
For averaging up, if you follow point and figure, then you get the differences in candlestick, the double top is a bearish pattern. In point and figure, double top is a bullish pattern. So in point and figure, if you see a double top breakout or maybe a flag breakout, then you add some more position. So in candlesticks also you can do the same thing. So I don't think hardly makes any difference. I don't think it is a major difference. You can open a candlestick chart and then you can zoom out and you can see a proper base formation. When it breaks out, add to your position. Simple in that case. And the same breakout will be visible on point and figure chart in the form of double top breakout first.
Somehow I'm not able to hear Himanshu, but I was able to hear everybody else. So I believe you got your answer, and I don't see any more question requests. So I think we end the day today. And again, thanks, Himanshu. Thanks a lot for your time. And by the kind of examples and literature you bring out, it is evident how much you read. And I believe it will inspire everybody to go and read more literature and learn more about technical analysis. Thank you all the listeners. Thanks for your time. Thanks for asking all these beautiful questions. And again, have a great week ahead, and we'll meet soon for another space session. Thank you everyone, and thanks Himanshu.